Good morning. Welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. And joining me live at HQ is Ted Bragg. He's the head of U.S. fixed income at Nasdaq. And Ted, it's a big day for fixed income traders tomorrow, getting that potential rate hike to wrap up the end of the year. What is consensus at this point, and what are some potential outcomes should we get a hike?
Yeah, you're absolutely right. Big day tomorrow and then big week. Consensus for the Fed is it's 25 basis points. They've telegraphed that to the market. Mm-hmm. And also everyone's going to look at the dot plots, where they want to be in 18 and 19. So we've got 3 rate rises as the consensus for next year, and then 2 more in 19. But really, how's the market react to what they're looking at in the future? And do they mention any of the fiscal stimuluses with the tax plan? I think that's the biggest issue. And now will they have to maybe ramp up a little bit more as we start to get some stronger economic numbers?
Right. Well, we've also seen activity in the Treasury market from payroll numbers, the tax cut plan, some volatility that came back into the equity market. What's the reaction been like with the Treasury market specifically?
Yeah, so when we spoke last, the payroll number was going to come out on Friday, and we had a stronger number. But what we've had is muted inflation numbers, except for this morning. So now you get a much stronger PPI number, and we've actually backed the market up a little bit, meaning yields are higher. And if the forecast is looks like inflation's picking up, and the UK had a big inflation number overnight also, that's going to have much more implications to the curve, to where the market's going to react, and maybe some volatility finally.
All right, let's take a look at that. Let's pull up a chart of the 2-year versus the 10-year here, and you're seeing that flattening of the yield curve. So that does have some indications for the future, as you mentioned before. And, let's talk about some of the supply dynamics and future rate hikes based on what this curve is suggesting to traders, and also explain why do traders care about the yield curve?
Right, so what that chart represented, and I took a look at it at the end of last week, is the yield difference between 2s and 10-year notes, and from the last FOMC meeting. And we've had a big move where basically the front end yields have continued to go higher. And why is that? Well, there's a couple different factors. One, the Fed's primed to go, so the Fed's going to move, versus muted inflation, as I mentioned, which affects the longer end a little bit more. The second component of that is what the Treasury has come out with is where they want to be from a borrowing perspective. And they believe that 66 months to 70 months, the weighted average maturity of all Treasuries, is about as long as they want to get. So in order to keep it that way, the issuance is going to be in the front end. And we know there's an extra $30 billion that the Treasury is going to have to auction starting in 2018 as QE starts to unwind. So you've got more supply in the front end. It has to push shorter rates higher. And from a trading perspective, it's where the focus is going to be, where you have to auction securities, where you have to distribute securities, and also where you have to now find natural buyers, which possibly for the last 5 to 8 years, it's been the governments, the QE, that's been taking on that additional supply.
Let's talk about market structure and regulatory issues, because we discuss this a lot in the equity side of the equation on Trade Talks. But is MiFID going to impact the Treasury market, or TRACE is another regulatory issue that fixed income traders look at?
So TRACE is probably what we're looking at the most, and it's TRACE for U.S. Treasuries, and it's the reporting that we're doing now to the regulators. But there was mention a few weeks ago that they now would like to discuss possible dissemination of that trade data, which is something new for the marketplace. MiFID 2 happens shortly. It happens in 2 or 3 weeks, and it means maybe a lot more is going to have to trade electronically, which from a Nasdaq perspective, we're really looking forward to. But what I think it also means is for the larger asset managers, if they're going to have to trade a particular way in Europe, to then as the clock rolls and they move into the New York hours, wouldn't they continue to trade in that same fashion, which could actually affect U.S. Market structure, market moves, and or how we see liquidity?
Well, let's wrap it up and talk about Nasdaq product. What did we look like going into 2018 with the fixed income group?
Yeah, so really looking forward to 18 and really looking forward to a much simpler offering. Let's keep it simple, let's keep it transparent, let's keep it fast, and that means we really have rolled into the GMTS, Tom Whitman's world, and look at really the equity market structure, and can we do some of that in fixed income?
All right, well, thank you very much for joining us. And
thank
traders,
you.
as always, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.